Okay, today is Monday, July 21st. Right now it's 10:28 p.m. Pacific time. So I'm just checking the charts here ahead of the London Open. I'm looking at gold right now. So gold is breaking out on the 4-hour chart. I did have a couple of positions open from the previous week and the week before. So I've been watching this trade to set up for quite a while on both the daily and weekly time frame. So let me just go all the way out here to the weekly. So I've been watching this trade for the last 2 weeks here. When the price came down, it's been supported by the Tenkan Sen ever since the end of April here. So since the end of April, it's been trading sideways and supported by the weekly Tenkan Sen. Back in June, the first week of June, it looked like we were going to have a breakout with this engulfing full-bodied bullish candle. So it broke the high of 3,400, but then it retraced and got supported by the Tenkan Sen once more. And the reason why I was watching ever since the beginning of July was because it was trading flat, but it could either continue to trade in a range or fall down a bit. But because the last 2 weekly candles were still being supported and closed above the Tenkan Sen, I saw this as a high probability setup that it might break out another time. In other words, it looks like the sellers are not able to push the price down below the weekly Tenkan Sen for 3 weeks straight. So we did have selling interest on June 16th, June 23rd, but then the sellers have either not been unable or unwilling to continue selling the price down. All right, so I'll show my trades right now. Based on the daily chart, I took a couple of early trades here. This was before a trend had materialized on the 4-hour and 1-hour charts, and I'll explain the reason why I took it. So my first buy I've been holding ever since July 13th. That one I entered with a 1% stop loss all the way down to 32.33. And if I take away these lines here, you'll see a bit more clearly. So I thought this candle here, it was going to break out. I took it as this candle was forming, and I took a rather wide stop loss all the way down to the second most low, not even the most recent low, but the second most low. That was just to give me a margin of safety in entering this trade before the breakout had materialized. So let's see how this trade looked in the 4-hour chart. So ignore these previous lines back in June. We're just looking at July. Okay, so in the 4-hour chart, it looked like we tested 33.55 here, and then we had 2 consecutive doji candles, and then I bought on the next, which appeared to be a breakout here. So I bought here and I set a wide stop loss. Now that we've seen this trade unfold a bit more, this turned out to be more consolidation on the 4-hour chart, and then eventually came back all the way down to 33.10. But at the time, I couldn't really tell. I thought maybe this was another I wave breakout, but this is where symmetry of the markets comes into place. You'll notice I drew these descending channels or even resistance lines. So this first one I just drew simply by connecting the high on July 15th to the high on July 2nd. So it looked like we broke out of this large triangle range, and this support has been going all the way back until March or April. So this large triangle range we broke out on, well, let's say July 10th or July 11th. July 11th is more clear. But even before that, you saw it kind of testing the upper bound and not really getting sold off. So this is what gave me a little bit more confidence to buy here. I bought on the breakout of the breakout. So the breakout was July 11th, and then I watched for a reaction. There were 2 days of muted reaction, no interest by the sellers, and then I bought on the next day, which was actually the weekly open, Sunday, July 13th. So it could have been that this would have broken out that same week and then rushed to 34.48 to test the next high. But it didn't, and it actually retraced back. So this is where me putting a wide stop loss kept me to be able to hold on to this trade. So I expected there was a potential for it to retrace, and I didn't even want to rely on this low of 32.85, so I just set another wider stop loss. Now we can see it didn't even test 32.80, and it bounced well above that level at 33.08. So even if I set the stop loss here, in hindsight, I would have been fine. But given I was entering early, I wanted to give myself an extra margin of safety using this previous low. Okay, so that was the week of July 13th. Nothing really happened that week, and then we consolidated all the way until Thursday, July 17th. So this is when I put my second buy on, and I'll go down even one more time frame. So this is the 1 hour chart. I had bought at 12:55 a.m. on this day, which was squarely in the London Open. So notice again, the price action I was trading off of was the approach of the channel resistance, which was, you could even say it started in the New York session on Thursday. So here for the entire Asian session, there was no selling interest. So the sellers were again unable or unwilling to sell the price back down to the previous low or continue the channel move downwards. So that is when I started picking up on this breakout opportunity. So London approached, and then we clearly broke out of the previous high, 33.43, and we closed above that. So that is where I put on another position, risking 1%. This time again to the second low. So I used 32.66, which was previously the first low, but I'm anticipating a breakout here. So this is now the new first low, 33.10. So again, I gave myself a margin of safety by using the second low and putting my second stop loss at 32.66. So again, this was a 1% risk. I used 2 positions of 0.14 lots. So in total, that was 1% risk of my account. And now the other position, I believe I trailed up to the second position here. So at the same time, decreasing my risk, I had probably just under a full 2% of risk open after I put on this trade. Okay, so that was Thursday. Friday last week, we didn't really have much action. New York and London overlap, not much action. And then Sunday opened, and this is where more continuation patterns happened on the 1 hour chart. So I'll go down to the 15-minute chart here. Okay, so Sunday, this was actually Monday Asian Open, but my Sunday, not much action on the open, but then a couple hours in, we saw some buying push up the price to 33.57. It came down a little bit, and then just ahead of the London Open by maybe 2 hours, we had another visibly clean leg to push the price above this 33.63 level. This was actually a period of volatility on last Wednesday. What was the event that happened? I think it was a PMI report or something last week. So what happened on Wednesday? Okay, this was a PPI report month over month. The forecast was 0.2, the actual was 0. Okay, so this news came out worse than expected. Okay, so regardless of what the news was, we know it was worse than expected. The market fought for a little while, but essentially this was not much of a change um, in this setup. Okay, but going back to what happened on Monday. So, so Monday, London opened, and then the London traders were probably looking at the price action from the Asian session, saw one, maybe, two clean legs up. The price is testing around 33.66, and this is where the buyers in London came in earnest to push the price all the way from 33.66 up to 3400. Okay, so now we are at a round number resistance and also testing some of the congestion areas on the 4-hour and daily chart that we've had before. So on the daily chart, we saw 3 significant, we'll say, fights around the 3400 level. First one was back in April 22nd. Next one was beginning of May. And then you could even say beginning of June and then mid-June. So this is where the buyers and sellers need to resolve some conflicts before we get the agreement if the price should break out or not. Okay, so now we're testing this level for either the 4th or 5th time. But I do think there's an edge for it to break out. One, because this is a rather long period of consolidation now on the weekly chart. And second, the long-term trend is still very much up. We have the price above the Tenkan-sen, which is above the Kijun-sen, which is above the Kumo, and the Chikou span is very much above the trailing price. And what's more, all these lines are angled upwards, so it shows the trend is continuing to move up. So yeah, I would expect the weekly trend to continue. If it breaks out here, we could go quite a bit higher to 3600 or 3800. In fact, each of these legs is quite long, so it might even go up to 4000. And then to put some perspective, we'll look at the monthly chart. So the monthly chart, it's been kind of frozen since the beginning of April. That is apparent from looking at the previous time frames. But now there is 9 days left almost in this candle. So if it's able to close above 34.44, then that would be a very strong indication that we could go even higher in the next month of August. But there's still time for the sellers to try and push the price down. The monthly Tenkan-sen and Kijun-sen are flat. Kumo is flat, but the only trend indication we have is that these Ichimoku lines are in order to give an indication. Okay, but yeah, on the daily time frame, the price has been supported by the Kumo very well. You can see every time it tries to touch into the Kumo, it almost never gets a chance and gets pushed back right away. This is an asymmetrical triangle, meaning the highs are approximately at the same level, but the lows are very much getting higher. So even with this asymmetrical triangle setup, we can see the bias is towards the price going up over time. Okay, so yeah, this leg, it's quite symmetrical still with this previous push and retracement in this shallow triangle here. So it may still consolidate a little bit, but we'll go back to the 4-hour chart. Yeah, so one indication is these past 2 or 3 4-hour candles are very much small in magnitude comparing to the previous pushes up. So even though we're getting a slight retracement off the 3400 high level, it doesn't appear to be very much. So we could be supported by the breakout level 3370, which is approximately the price level of the Tenkan Sen here. So if the price retreats too much back to this level, the buyers may look at it as value and come in to buy, which would push the price back up. But it could also spend a little bit more time in consolidation, given that these previous retracements were several iterations back before having a next major move up. But yeah, as far as my two trades, right now I am holding profitable. I am trying to hold it more for the proper breakout on the daily chart. So right now my stop losses are still at the same level, but I am thinking to move my stop loss up. Again, looking for a second low to give myself a margin of error. So that's where it looks a little bit tricky right now because there's no retracement, so you can't say there's a low. This is where I may rely on the Ichimoku lines as areas of interest. So I could say that the Tenkan Sen is one potential low and the Kijun Sen is another potential low. And this would match the previous breakout levels here. So if I were to put a stop loss somewhere around here, 33, 38, this could make sense. It's also capturing a low here made back in July 14th. So this would be I would say a conservative level to put past a potential retracement, but not get triggered if it does bounce. And it would reduce my risk, open risk on these two positions considerably. So I could think about putting one here. I could also think about putting one here at 33.03. Either of these positions would cut my risk for the previous two trades in roughly maybe half. Okay, overall I am quite pleased at my conviction to hold this trade. So when I started trading, I didn't usually enter before a visible trend. I would just find that I would get chopped out of the markets too often, or it would be inefficient holding a trade for that long. But given the risk to reward in such a long period of consolidation, I've adapted my entries a little bit to be able to capture an edge on these. But the key is I've realized you have to buy before a breakout happens. So if you're buying as a setup for a breakout, you want to buy as close to the midpoints as possible. That way you can set a tight stop loss, or you can pick a more generous stop loss to not risk as much and still stay in the trade even if retracements happen. So both of these, I would say I bought quite close to the daily Kijun Sen. So these are very much close to the midpoint of the medium term in the daily time frame. Even the long term, if you look at the Kumo, all the lines are pretty much overlapping. So you could say 33.27 is a long term midpoint if you take the Senko span A as a price. Okay, so those are most of my ideas behind this trade unfolding right now. I do see a potential channel that could form an upwards channel, so that it's quite interesting. It would bounce off this level, so if it goes out of this channel here, that might be a more indication of a breakout on the daily time frame. Okay, and also I didn't enter right here, even though it may look like it's a sharp thrust out, broke past these highs. I recognize that these are not good buying opportunities in the short term, just because there is still a lot of room to retrace for people to take profits anywhere between 33.51 and 3400. So that's why I did not buy in the New York or Tokyo session open. Okay, I'll give more updates later as this trade unfolds.